Hello guys, welcome to today's edition of the London Session Open. Today is April 10th, 2019, and my name is Alejandro Zambrano, Chief Market Strategist with ATFX. We're going to take a look at the markets as we usually do at this time of the day. It's ECB day today as well, so it's going to be an interesting time to take a look at the euro. Now, the euro overall on the daily, as you can see, is stuck within a range and is slowly drifting upwards. And as long as you're about 111.75, we may actually go up to 13.23 and maybe 114. Especially as if you look at it from a 1 hour chart, you can see we have a small head and shoulders. So with head, left, right shoulder, this was the break, and the target is 13.23. Now, my view on the macro fundamentals, though, conflict with the technical view. So my view on the fundamentals is that the ECB is probably going to be a bit dovish, and that could push the euro lower. So I don't have a position on here, and if they're dovish enough to send the euro below 111.75, then that's going to align the technicals with the macro fundamentals, because a break to 111.75 would most likely open up for a steeper decline, maybe to 109 in the next few days and a week, sorry. And because we can see and treat this as like a major range, even though it's not like a perfect rectangle, you still get an idea, because this is a double bottom break, and that by itself sort of suggests 109 as a good target. So I'm definitely bearish here, but it will only be that on the break here. GBP versus the USD, the market is trying to create a base here. The trend is bullish about 129.52, which we talked about over the last few weeks, and I want to continue to be bullish, but it's very, very slow moving. And because of Brexit and everything, it's very, very difficult to do anything here. But the trend is bullish about 129.52. If you really want to trade, it's more about buying, and then just in the next week or two might be up here and we can book some profits. As for the dollar versus the Japanese yen, is within that range, which is 109.70 and 112.17. There's not much for us to do here. The price is just trading sideways. As for the Aussie dollar versus the USD, the trend is bullish above 69.79, and it's trading sideways between 69.79 and 72. We really just have to break to the upside or to the downside. I don't trust this move at all. Yesterday about this time, the chart looked exactly like this. It was pretty much up here, and then before the end of the day, the market moved down lower. Why? Because when the market is choppy like this, we can't trust the short-term charts to give us anything constructive. As for gold prices, clearly moving upwards, as you can see here now. We're still dealing with what could be head and shoulders, with a head, left, and right shoulder. Just to trade that, though, we need to trade below 1280, which we haven't done so far. That is the March low. We need to trade below this. At that point, we could see significantly lower prices. The alternative is that we take this out, and then it becomes a failed head and shoulders pattern. The difference between the right shoulder and the target is the same difference as between the head and the neckline. Crude oil prices continue to drift upwards. People are optimistic. Prices are going up higher. But the best trade ideas here were down here in February, when I said at 55.69 that we're probably going to head higher. Also, this here was highlighted by me at 58.24. I also talked about buying here at 60.57. We're not there right now, as you can see. We're far away, and people that have been buying, especially here, have had the opportunity to offload. We also talked about buying here and here. So this level here is about offloading and booking profits, and then taking a simple fib from the low to the high. We look to buy a dip where the risk reward ratio is better, which is really around the first fib all the way down to the third fib. The S&P 500 remains bullish as well. We talked about buying here and here, and the market moved up towards our targets. And if one would like to get involved, we need that dip. Doesn't mean though the price can't go higher. It just means that down here, where we are now, we don't want to be buying. We want to be buying down here where the risk reward ratio is better. And the same is for the German DAX, which had a quite nice decline. I suspect it can still go lower. It might maybe go all the way down to maybe 11,750 or so, maybe down here. But as long as you trade above 11,600 and 11,637, the trend is bullish, and I suspect we can go higher. All right, that concludes today's market update. Today we did this recording offline because we were just having some issues with the computers and GoToMeeting in particular. So we didn't do it live, but if you do want to join me live, then just sign up to GoToMeeting. That link, I share that usually on Twitter as well. You can find them under education and webinars. And under education and webinars, we have more than just my webinars. We have other educational courses. I'm not hosting them, but I've been told they're really good and popular. For example, here, how to master charts analysis and candlestick analysis in English. And then you have obviously in different languages here, but that is something. And then you have mastering Japanese candlesticks later on this month, followed by applying technical analysis in the Forex markets. So there's a few topics here that are interesting you can check out. And if you don't have the patience to wait, you want to check out some stuff already right now, then just go to our YouTube page at ATFX. And in ATFX, let's see if I can go to the channel. You can find a lot of different content here. You have Front Row, which are my daily webinars, the daily videos. Then you have as well the morning briefs, which are these videos, plus the training education, which was what I was referring to. So you can check this out. There's quite a lot of them here in the playlist. Yeah, so check them out. Okay, guys, if you have any questions, let me know. I'm available on Twitter at AlexFX00. Thank you, and bye-bye.